Good morning. I'm Ron O'Brien, Market and Derivative Strategist for Interfood Incorporated. I'm in our domestic headquarters in Miami, Florida. This is your global dairy brief for Wednesday, January 8th, 7:44 a.m. on the East Coast. Let's get into the global dairy trade report. Fonterra's bi-monthly dairy auction took place yesterday morning, but I think markets are still moving off of that analysis. GDT was down 0.8% overall versus 2 weeks ago. Whole milk powder, which is the biggest product category, down 0.6%, around $2.39 a pound. We're seeing the whole milk powder futures on the NZX. Mixed activity. We saw the March contract drop $30 a ton yesterday to $49.20, while the June contract was up almost $300 a ton. So it appears that perhaps some of this slide is over, and at least when you're looking at where was the bottom in some of these markets. Yeah, whole milk powder down slightly, but some good trading activity on the NZX. On the S&P market on the global dairy trade, that was down 3.4% to 46.88 a ton. That's equivalent to about $2.13 a pound for our non-fat dry milk contract. The Dairy America product was trading pretty much at $2.10. So product made out of the west coast of the United States trading on that auction on the other side of the Pacific, a bit higher than our futures prices and our spot markets. However, the S&P, we saw declines of almost 7% in February overall, declines 8.8% in June, but $4,500 looks like it was a solid floor for buyers to come into that market. We saw the NZX S&P price overnight mixed. High about $100 per ton gains in January and February. We said there was pretty good floor around $4,500 a ton, but in February S&P trading right around $48.40 right now on the NZX. We saw the June contract almost up $500 a ton to $51.10. So pretty good buying coming in, even though the overall GDT price was lower. And then butter on the GDT. Up 5.1%. We've been talking a lot about fat the last couple weeks here, and we've seen our markets kind of ignite. But butter on the GDT up 5.1%, around 42.23 a ton. That's equivalent to about $1.9550, but that's an 82% product. If you take out a couple percentage points there, and you're looking at 80%, it's about $1.87 equivalent to our price, where our cash market right now for butter at the CME is $1.62 a pound, and the futures are trading as high as $1.66 a pound in March. But we'll talk about butter in just a second. So that's still moving markets. Not really much going on out of the Eurex this morning. Their butter price is flat, but over here we've seen an explosion in all types of dairy commodities. Block cheese now $2.11 a pound, up 6 cents yesterday. Barrel cheese up 11 cents in the cash market yesterday. We're pricing milk. We're pricing Class 3 milk now at $21.12 a hundredweight. Class 3 futures were up sharp yesterday. We're up another steady to 20 cents today. The January contract 2028. The February contract, maybe a week ago, we were talking in the low $19 range, pricing in 60 cents of discount. Now we're still discounted, but it's $20.35, leading all markets higher, leading all prices in the Class 3 pit. The 2014 average for Class 3 is up 11 cents this morning to $18.54. Still a ways to go, but still climbing higher. I put a report this morning. It was just a blip on Dairy Post. Kraft just talking about Velveeta cheese supplies being low. I don't know if that's a top in the market when you hear stories like that, but again, we know that we're going to see demand destruction at these levels. The problem is, I think that most of the buying you're seeing right now in the cheese market and even in the powder market in the state is traders that said they could deliver product that can't, and they're coming to the exchange because the exchange is essentially the only place that they can find available product. And we see that with no product being offered, the price continues to rally. I don't really see any long-term buying at these prices, 3 months, 6 months. We probably don't even see any hand-to-mouth buying at these prices. But again, that doesn't mean that we can't move higher. And you want to pick a top. I don't think anyone is really has the ability to say where things can go when you need to purchase product. I know a good dairy farmer friend of mine, it says, high prices aren't the problem, no product is the problem. And he's, of course, was talking about the grain markets, but essentially, if you're a buyer of commodities, the supply of product is much more important than the price of it, especially when you're short. So we're seeing that in the cheese market, we're seeing that in the powder market. But cheese futures trading $2 a pound in February. Still, traders are a bit leery of what happened last year at this time. We saw the cheese market trading similar levels at the end of 2013, but at the end of 2012, going into 2013, but when we saw a 60-cent crash in cheese prices. So I don't really think we're in the same situation as last year, but traders are hesitant to really bid this thing up anywhere close to par, and then par keeps moving because the market keeps moving higher. Class 4, we saw the butter unchanged yesterday at $1.62 at the CME, but powder futures seem to want to move a bit higher. AMS, I didn't do a dairy post yesterday, but AMS moved higher once again like last week, and it really has kind of limited offers in that February powder contract. But with Dairy America selling product at 210 on the global dairy trade, and I'm hearing sales 205, 208, 210 a pound. We're probably easily going to clear through this $2 benchmark in the coming weeks. So class 4 in the front is supported by powder, and then butter, $1.66 a pound. We'll be pricing easily over $22 in a couple of weeks. But the market, class 4 market's been a much more quiet due to the overall sentiment that we've hit a top. That doesn't necessarily mean that we're going to go down from here, but eventually I believe traders think we're going to go down from here, and they're starting to price that in on the futures curve. Powder futures yesterday were down almost a penny in some months, although they are still at a discount to both the world market and to the cash market. So class 4 futures, we are pricing $21.71, but the 2014 average is barely $20, $19.98. WASDE comes out later this week, so that's what the grain markets are talking about or trying to get ahead of. This cold spell, the coldest air in 20 years that's blown through the Midwest, the threat is yield losses to the winter wheat crop, potentially 15% of the crop under some pretty terrible warnings. And that helped spur a rally yesterday in wheat. This morning, March wheat is up 4 cents to 6.06 a half a bushel. Corn still hanging in that 4.25 bushel range, 4.26 last trade. And then you have January soybeans down a nickel to 12.95 a bushel. Cattle markets yesterday hit a record high, 137.10 a pound, or 137.10 a hundredweight, however you want to say it. But that is the highest price since these markets started in 1964. And again, 2013 in cattle futures overall, or cattle prices were up about 2%. That was the 5th year in a row, and again, the longest rally since 1964. So cattle futures making it even harder to rebuild dairy supplies due to the strong prices of just about everything, from replacement heifers to stringers to even to steers as well. But we'll talk a little bit more. I was supposed to be in California this week, but this winter weather kind of cut my trip a little bit short, so I'll be postponing that for a week or so. So if you were expecting to see me, I apologize, but can't do anything about Mother Nature. You just have to deal with it. Other than that, you guys can find my information on Dairy Post. It's just essentially my Twitter feed on a link to that site. But 10:40 Central Time We do a live broadcast. I'm here in Miami, but broadcast bids and offers from the Board of Trade, these cheese, powder, and butter auctions. So make sure you catch that. The login and call-in information is at the top of Dairy Post. You guys have a great afternoon. Call me if you need anything. Thank you.